Tactive. He joins us from Las Vegas. Eddy, thanks a lot for joining us. There's a lot of uncertainty in markets these days, the political situation, the tariff threat situation. Just today, Jerome Powell has pretty directly stated that the Fed is not in any kind of rush to cut interest rates. How should investors be navigating these times?
Yeah, I think you're in this situation right now where you just have to remember to stick to your strategy and stick to your plan. There's definitely a lot to think about when you hear on one side there's the concern about potential inflation coming back, which is why Powell is kind of just saying, we're going to wait and see. But then on the other side of things, you hear about tariffs, and you're like, oh my goodness, like how is that going to affect things? And then you start looking at things like gold and treasuries, and you know, gold just continues to hit new highs. We see countries and companies and investors all over the world continuing to accumulate gold. And even though we've been having all this inflation talk, we've actually seen the long end of the bond curve come down from an interest rate standpoint. And so there's a lot of conflicting signals out there right now. The job market isn't maybe as strong as it was a year ago, but earnings are coming in like pretty good for the most part. So, you know, if there wasn't that wall of worry, then the market couldn't hit new highs. And so that's kind of a good thing. But I do expect volatility heading into the next 3 to 6 months for sure, maybe the whole year, just as things kind of become what they're going to be, because especially in America, there seems to be a lot of change that's being pushed through, and no change comes without consequence. And unfortunately, usually, even if something is for the good, it usually gets kind of bad first before it gets good. So we're just saying navigate the volatility, stick to your discipline, and we do think that diversification and stock picking will win over the passive plays this year.
Let's circle back to gold, which you mentioned briefly. It, of course, as we know, is breaking into new all-time highs as recently as today, this morning. The narrative on gold appears to be that investors are moving into it as a safe haven, perhaps driven by the uncertainty triggered by the tariff situation emanating out of Washington. Do you think gold will move higher?
I think that there's nothing slowing gold down right now, and the trend is strong, and never bet against the trend. If we didn't figure that out with Nvidia a couple years ago, then we're never going to. The trend is running. And people are concerned, and there are cracks under the surface, so to speak. And so kind of building up that stockpile and piling in the gold doesn't surprise me at all. You know, what concerns me about the overwhelming interest in gold is what that typically means for equity markets. And typically that means correction or volatility ahead. And so we just have to be mindful of that as things begin to unfold.
Okay, let's go to some stocks that you like. You mentioned that you think this is a stock picker's market. One that you like in the large cap space, Palantir, ticker symbol PLTR on the NASDAQ. Why do you like Palantir?
Yeah, I mean, you know, we like buying stuff that's on its way up, and because we feel like it's continuing to go higher. So we've seen a lot of like trend development here. We've seen the stock kind of just run straight up in the last couple of months. We had like a little bit of a blip, and it recovered very rapidly there. And so if we're only looking at it from a pure trading perspective, we like it on the momentum. Of course, we do think this could kind of be like the MSTR of this year from the standpoint that AI was so big last year, and cryptocurrency was so big last year. We think that the play is more in the software space this year when it comes to AI, and Palantir is leaning into that. And what they really try to do is just make businesses more efficient. And with these concerns that are developing, as we just discussed, a lot of companies are looking to try to do more with less. And so efficiency is like the #1 priority this year. And that's why we think that Palantir could have a great year.
Okay, another stock you like is EQT Corporation, an independent natural gas producer trading in New York.
Yeah, you know, like we keep hearing about tariffs, and so when we hear about tariffs, it comes back down to, okay, so what is that going to do? Well, maybe that will cause inflation to come back, but maybe that'll cause more consumers to lean into stuff that's already in America that doesn't have the tariff intact. And so natural gas and energy in general, I mean, we saw it with U.S. Steel today with the announcement of tariffs on steel. We saw U.S. Steel go up, and so we expect kind of the same thing from an energy consumption standpoint. If we continue to see these hindrances, if you will, coming from the international space, that means that we need to look internally. And EQT has been in a situation where it's competitive from that standpoint, but we're also seeing interest develop in the trends. And so we're not in it yet, but we're definitely watching. We could be in it soon.
Let's finish with an ETF that tracks the Japanese yen. Why do you like this one?
So, I mean, everyone has short memories when it comes to investment in general, but if we remember last August, there was this thing that happened where the entire stock market, it seemed like everywhere, just sold off very rapidly, and the cusp of that was due to the yen and what they call the carry trade on the yen. And so as the yen becomes stronger and stronger and stronger and stronger, that could, it could put kind of a squeeze on the yen, which would obviously push it higher. That could also affect equity markets in a negative way on a global scale. And so we like it not only because of where it's at on the chart, but also because we feel like it could be an effective hedge if we have some type of unwinding that lasts more than 3 days.
Eddy Gifford, thank you so much for this conversation.